JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 11th of January 2022. So yeah, before we jump into the charts, guys, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, let's jump into the charts very quickly. So yesterday was a bit of a mixed session. As you can see, I mean, Nikkei yesterday Nikkei yesterday was closed, but today when it opened up, it drifted lower and made its way closer to the lower side of the this symmetrical triangle pattern, the one that I was talking about for quite a while now. So for now, guys, basically the same story. I mean, the same game plan here. Still waiting for a clear breakout outside of this formation in order to consider the next short-term directional move. For now, unfortunately, that's the kind of, like I said, we can only try to maybe aim for some levels inside this inside this pattern. So when previously I talked about the 21-day and the 100-day EMAs, I said that if we drop below those, then my next target is the 200-day EMA, or even this 28,310 territory right here, or the lower side of the pattern. Well, I mean, so far it's kind of working out. We also dropped below we dropped below that 200-day EMA. We stayed below it. What I'm leaning to right now is maybe for a bit of a test of this lower side of the triangle, and then yeah, we could take it from there, basically, because if it rebounds again, then, well, I mean, we'll have to continue monitoring the situation here. If we take a look at the cash index, we can see that it is sitting at 28,126 zone, so or actually a little bit lower, 20 now. So yep, basically it's continuing to slide slowly. Shanghai Composite, looking at this picture, and if you remember yesterday, I talked about this basically, and I said that although, yeah, we had a nice positive kind of rebound here, still, if this 21-day EMA continues to provide a hold up, and in general, what I said, that this could still be seen as a possible falling wedge pattern, and well, I mean, and until we see a clear breakout through the upper side here, we cannot really get comfortable with the upside scenario. So basically, for now, the only thing here is to keep an eye on this area here near the lower side of the potential falling wedge pattern, and also near this 200-day EMA. For now, like I said, all eyes are on this area. That's from my side, of course. All eyes are on this area, and I want to see if this holds. If it does, then it could result into it could kind of follow into a beautiful up move again. However, if this area gets broken and yeah, we stay below this 200-day EMA as well, maybe lower levels could be met. Yep, I can see in the chat room here, Evu, yep, good morning to long time no see. So yeah, and of course, good morning to everybody else who's joining in. I hope everybody's having a wonderful start of Tuesday. So yeah, jumping into the German index, DAX, and yeah, this one drifted heavily to the downside, fell below the 21-day EMA, and stayed there below it. Now, of course, yesterday we saw a bit of a rebound in the U.S. equities and in the U.S. indices, and those kind of pushed some of the cash indices that were closed. Some of the cash indices, the European cash indices, they pushed them a little bit higher. So if yesterday, as you can see here, the index ended up near the 15,768 territory. Now it's currently sitting at around 15,860 territory. So basically, we are back near this hurdle. This is the level that I talked about yesterday. I said that if we drop below it, then yep, lower levels could be met. So we're basically now back to this hurdle, and we are back above the 21-day EMA. Of course, all this paints a bit of a more, kind of an interesting picture here. Now, if we manage to climb back higher here and push maybe somewhere above this 15,943 territory right here, maybe I could start looking at some higher levels, and maybe I won't need to wait for a push back above the 16,000 mark. However, let's be very careful here, guys. For now, yes, the fact that it climbed back above this 15,862 territory, that's of course a good sign for the bulls, but a bit more reassurance would be needed here, and that's why I'll wait maybe for this 15,943 level instead. In terms of the downside, if it drops back below that 21-day EMA and stays below this 15,800 zone, somewhere around here, yep, I will aim for a larger correction to the downside. The reason why I'm saying that at the moment I'm kind of, if it drops back down, as I said, because currently the cash index seems to be kind of showing that the index is back here, back above this hurdle here, back above the low of the 7th of January. Now jumping into this S&P. So the S&P, yep, showed good performance yesterday. In a way, still kind of ended up the day slightly in the red, not much, but that's all okay. You can see a beautiful rebound here, and this is what I talked about yesterday as well when I covered this one. I said that I will aim for a larger correction towards this upside line taken from the low of the 4th of October, which we managed to reach perfectly. So we managed to we managed to drop slightly below it, but again, let's not forget that this is a bit of a tentative line. I mean, we could start drawing some other ones here right now after what we saw yesterday. I mean, there we go. I mean, this is even a much better upside line here, but again, well, I'll keep that on the chart for now, but again, all these lines are a bit tentative still. What's more important is that the index managed to climb back above this 4,651 territory. I marked this level previously, and yep, we managed to climb back above it, and look at how well this area did provide support, and the cash index is currently sitting at around 4,668 zone. Let's see if we can climb back up here. For me, I'm going to be very careful and very cautious here, and I would prefer actually to wait for a push above the 4,718 territory in order to get a little bit more comfortable with the upside. NASDAQ. So yep, yesterday, just to kind of mention here, in the US, the best performing kind of sectors were healthcare, and then followed by technology and communication services. Now, healthcare, of course, pushed nicely to the upside. Yep, and the major kind of healthcare stocks, we saw those pushing nicely higher. Of course, technology was picking up, and we can see by the move here in NASDAQ. I mean, look at this. I mean, initially we were selling off. I mean, with the beginning of the trading session, we were losing ground here. We were dropping heavily, and yep, we also made it below the high of the inside swing high of the 23rd of September, which is roughly around that 15,357 territory. And then you can see that it kind of provided good support for the body of this daily candle here. We pushed higher. The cash index right now is sitting at around 15,670, or sorry, 15,610 zone, sorry, not 70. Yep, it's basically near where it closed yesterday. However, in order to maybe get a little bit more comfortable with the upside, and this is where I need to adjust some of my levels. So first of all, I'm going to mark this one. I'm going to keep this highlighted highlighter here, and I'm going to mark this key important support zone now. For the upside now, this is where I'll have to just remove this for now, just to get it out of the way, basically focus on some new levels. Now, first of all, the adjustment here could come on this around here, near this 16,670 level. This is one of those levels that I'm going to keep an eye on. Another thing to keep in mind, of course, is this downside line, tentative, of course, for now, but again, let's keep an eye on it. In terms of levels for the upside, now I'm going to be very adventurous here, if I can say it this way. Basically, I'm going to keep an eye on yesterday's high near the 15,628 zone, and also I'm going to keep an eye on the 100-day EMA here, shown as the green line. If it climbs back above all this, then, well, I mean, maybe this is where we could consider a bit of a move higher. I'm not saying that I'm going to go radically to the upside here, no, but maybe I could start aiming for the 21-day EMA. But again, let's wait for a move like this first. DXY, the dollar index, so yeah, it continues to move sideways here, and to be honest, I'm going to leave it here. Of course, I'm going to continue picking up on this one in every video, but just to kind of see what's happening. But for now, basically the same kind of idea here remains valid. I mean, we're seeing a range, and yep, as long as it stays in here, I'm kind of just observing the price action. Gold, so nice, good pop here, higher. You can see, and this is what I drawn yesterday's for you, and basically what I said, that it seems that for now gold is kind of maybe stuck in this little symmetrical triangle, or maybe veg even, and it's currently just oscillating around its EMAs on our daily chart here. So I would say yes, the sign is good that we've climbed back above this, back above all of these EMAs in our daily chart here. What I can say here, and if applying the same logic that I've drawn here from the slightly shorter term perspective, you can see that we are approaching this this downside resistance line taken from the high the 16th of November. On this, at the same time, we could maybe draw something like this, but it's not really ideal. It's just probably trying to find something where there's nothing. Maybe something like this could be a good line. So that's why I'll leave this for now this way. And basically what I'm leading here to is that maybe we could see some sideways activity for a while, and then maybe we'll wait for that pop through one of these shorter term lines here, and then yeah, we'll consider the next kind of directional move, short term directional move. US oil, WTI oil, so yesterday broke and stayed below this upside line. We can get rid of it now, or actually let me actually reuse this one. Maybe this could play out. So yep, I'm gonna keep this on the chart for now. The thing is that, I mean, still it's kind of more on the positive side than on the negative. But if you're looking for some upside, I said before, yesterday I said that I'm gonna keep an eye on this 79.33 zone. Nice good pop above it may lead to slightly higher levels, but I will keep an eye on the current highest point of January near the 80.45. But if that gets broken, well, a nice good forthcoming higher high would be confirmed. So and then we could aim for maybe this downside resistance line. Who knows? But for now, yep, it is quite interesting here. And if we drop below the 77 territory, and this is where I'm gonna consider maybe a bit of a corrective move lower. Bitcoin, so haven't looked at this one for quite a while, but after it drifted nicely to the downside, after it kind of broke this little range, the lower side of the range, it moved lower but found support near the lowest point of December. As you can see here, we've created a new low for January, of course, but can this move lower again? Well, again, I will say for now, the lowest point of December is kind of playing out nicely, and it is providing good support so far. Let's see if it can continue doing that. But if you're looking for some upside, maybe I would prefer maybe to wait for a push at least above this 45,539.40 zone, approximately around there, guys, and basically a push back above the 21-day EMA. If we get that, I will slowly start aiming higher. Now, jumping into a few pairs very quickly here. So AUDCHF. So I haven't looked at this one for quite a while, so let me actually redraw a few lines here. So probably the more this one I have to mark here just to have it. This is taken from the high of the 18th of March of last year, of course. From the shorter term perspective, this is again something that I need to draw. Actually, no, sorry, apologize for that. No, this is totally irrelevant. Would be just, again, as I said, trying to find something where there isn't anything. However, again, depending on how this is going to play out, maybe this is going to push a little bit higher here, and then maybe go back down, test this upside line. So actually, you know what? Let's keep it here. Although I'm not really confident with it on this upside line yet. So, but for the sake of it, just out of curiosity, if this is going to push higher and then drift back down and will provide support, well, maybe this could play out. However, for now, what I'm really looking at here is the high of the 16th of December, or actually, in other words, the highest point of December near the 0.6675 zone. So if we clear that, this will confirm a forthcoming higher high. We could go for some upside here. We could go for that 100-day EMA or the 200-day EMA, and then so on and so on, up until we maybe test this downside line. But we'll get to that point later. For now, long story short, if you're looking for the upside here, then at least wait for a pop above this barrier for the downside. Now this is where the interesting bit comes in. I would probably stick to this little area, the low of last week, and which is around the 0.6565 territory, and if we clear that, then well, maybe this could open the door to slightly lower levels. USDCHF now also, and if you remember yesterday, and if you remember last week, I told you about this idea of a possible kind of falling wedge pattern here, and yep, that kind of worked out nicely, I would say. So in a way, the reason why I'm saying in a way, because we had a bit of a moment here where probably a lot of traders got caught out and started giving up on the upside, and you can see that the 200-day EMA continued to provide support, and well, yesterday we saw that nice pop, we saw that move higher, and well, boom, there we go. We managed to reach some of the areas. We managed to overcome this 0.9251 zone. And another thing, we found resistance around here, guys. So that's the high of the 7th of December. Or actually, the high of the 7th of December, the highest point of December is around here. So we managed to reach the high of the 7th of December here. That's quite interesting. So for now, basically, I'll keep the drawing, but I think that I need to amend a few things. Overall, I just wanted to say that as well, that overall I'm still trading, we're still trading inside this range here. So basically, we're now kind of above the midpoint of this range. And if you're looking for some upside here, further upside, yes, we could go there. But let me just put this line here, and let me just draw this something right here. Basically, we're still kind of trading, and now we're trading above this steep upside line taken from the low of the 31st of December. And for now, I mean, we can say also that as long as this upside line stays intact, we could see a nice, good, steep up move further. So, long story short, if you're kind of maybe looking for some upside, I would say I will wait for a push above the 0.9275 territory again, and then I will go for the upside. At the moment, we're seeing a nice little corrective move. Everything's kind of fine here, but yeah, if this manages to climb back above the 0.9275 zone, then yes, we'll go for some higher levels. GBPUSD, guys. So, quite interesting. We're still hanging around here. This is what I talked about yesterday, if you remember. This 200-day EMA, and we're sitting just kind of near it, and we're just fractionally below this downside line taken from the high of the 1st of June. So, what I can say here is that still the same kind of game plan remains. If we clear this downside line, if we break it, then yes, we could go for some higher levels. For now, I'm just being very cautious. I'm not saying. I'm not leaning also to the downside yet, although the downside line continues to provide resistance. So we have to say that the line is still kind of intact. So it could still result in another decline here. But the fact that we're kind of very close to this line, I mean, this makes me cautious. Yeah, if we do break this and stay above this downside line, then well, we could see some higher levels. But again, until we see that break and until we see that confirmation, I cannot really get comfortable with the upside. So GBPNZD, guys, that was I picked up on this one last week, and basically I've talked about this steep upside line, which, as you can see so far, is kind of doing its job and yeah, providing good support. What's interesting here as well is that we managed to finally reach that psychological 2 territory, but of course that didn't happen yesterday. It happened last week already, but nevertheless quite interesting. We're currently trading slightly above that psychological 2 level, and we're currently sitting slightly above the high of the highest point of August of 2021, and I think, if I'm not mistaken, that's the highest point of 2021, guys. So quite an important level, quite a significant level here, I would say. The big question here is, can we continue staying above it? And well, I would say time will tell. For now, for my little issues, the fact that we, in quite a, let's say, short period of time, I would say we had or actually maybe not a very short, 2 months here approximately. So in 2 months we had this quite steep up move here. We managed to reach that highest point of 2021. Can we go further? Well, maybe a bit of a retracement here first could be possible, but it all depends on how this is going to play out in relation to this hurdle, this highest point of 2021. A quick update on EURCAD. Just wanted to mention that yesterday I talked about this one, and we were trading around here near this 1.4324 level, and then yep, we drifted below that. But what I was saying, wait for that daily candles end, because as you can see, we had a false breakout, and there we go, boom, the pair drifted back up here, and what I said, that it might kind of move a little bit higher here as well. Maybe you could go back to this downside line. So keep your eyes on this, still keep your eyes on this hurdle, this 1.4324 zone. If we stay below it and the body of the daily candle stays below it, then yep, this is where I'll get a little bit more excited maybe with the upside. EURUSD. So a bit of a roller coaster ride here, and yep, it continues to kind of oscillate around that 21-day EMA and continues to get squeezed, I would say. So if you're looking for some upside, well, you'll have to wait, and if you're looking for the downside, well, you'll have to wait as well. So basically for now, it's just kind of a waiting game here on the euro dollar. Although it's quite interesting, don't get me wrong, I mean, but yeah, if we need a clear violation of one of these lines before, let's say, considering the next, at least short-term directional move. So guys, that's it for this session. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. So if you want to catch me tomorrow morning, as always, at my Trader's Espresso, that's 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.